everybody, this is the Fibonacci Princess Tammy Marshall. I work in the Fibonacci Queen's Room here at Simpler Trading, and I want to just talk to you today about why it is important as a day trader to look at different Fibonacci time frames while you are trading. Today I'm going to be talking about gold, and I'm talking about gold futures, the GC with the Z contract. If you were in our room yesterday, I did have this set up. We had a 5-minute pullback, which is great for day traders, here coming in right around 1930. We bounced and met this target. Well, what happened up at this target? Why did we have that overnight correction? And it ends up being quite the correction. If you scroll on over here and see, we actually end up coming back through that support. And that's why we say in the Fibonacci room, please start trailing up your stops when you get into these green extensions. The green means money. So you had your setup and your trigger, you entered the trade, and up here at the target, it started to come back off. Well, not only because of that green target, but also because I had resistance there on the 120-minute chart. That is why it's important to pay attention to the different time frames. On the 5-minute chart, we had an extension. On the 120-minute chart, we had resistance. So from that resistance, we're going to look at what the extension was of that. And we did meet that extension on this downside, and then we did make an extension of another swing. Now, this morning, I set up a new trade on my 120-minute chart because we went through the previous setup. Okay? Now the setup is at 1915. Now that is not an official setup in the Fibonacci room. However, you can take that trade and know your risk is defined at 1915. The official setup would have actually been down here at this two-step 1906 to 11. But either way, we bounced and got up here into some resistance. We have now cleared that resistance. Okay, so now what I do, I look for more resistance, which we do have more resistance coming in up here. Now what you do is you're going to go back down to another lower time frame chart. This is from this morning. I had this set up when we came off of that resistance, which was right here, came down, some of the previous resistance, we came down, met this support, bounced, and have met this target on the upside, which also correlates with the 382, okay? So now we're making another decline. Now you can go back to another lower time frame chart and look for a new re-entry. It looks like we do have a two-step pattern here, and this is something that you would get familiar with if you're in the Fibonacci room. Okay, and we are on top of that two-step pattern now. And that's what I would tell you. I would say, okay, now here's your setup. This is your zone of risk. If you're not already in gold, you can get in gold again. Target off of that is going to be, it's just a short-term target of 1957. But if you wanted to hold on to that, the next thing I would want you to look at is where is our next zone of resistance on gold? Okay, we've already gone through that. Already gone through that one. Let's see, we've got that resistance, and we have this bigger swing resistance that I want you to watch out for. So I'd want you to watch out for 1978 to 83, and then 2001 to 2002. Then the overall resistance of this 120-minute chart that is still intact because we have not taken out this low is going to be 2035 to 43. And then what about the daily and the weekly charts? What are those looking like? Well, on the daily chart, we've bounced. And what I see here on the daily is we're above the 200, we're above the 50, but we have mixed parameters because the 5 has crossed below the 13 and is on a sell. So on the daily, we do not have a royal setup, but if you go up to the weekly, that is actually where I found on this weekly continuous chart. I did another video on that. That is actually where I found this setup, because on the continuous chart, it allows me to go back much further and get better data. On this daily chart, the data, when I go far back enough, it starts getting too choppy. So that is why I go to this weekly continuous chart. I had that set up, 1871 to 75. We bounced, came up to the 786, failed, and now what we are looking at is a continuation of the move. Not an exact hit of the 786 here, but looks like we are close enough and are bouncing from that also. So that is why I want you to look at different time frames. Different time frames tell you different things. The weekly chart is a royal setup. We are above the 250 and the 5 and 13 are on a buy. The daily has got mixed parameters because we have the 5 has crossed back under the 13, but we are still above the 200 and the 50. The 120-minute chart, the 8 is underneath the 34. Okay, so for intraday minute charts, we use 8 and 34. For daily and weekly charts, we use 513, 250. But on the 120-minute chart, it is on a sell, okay? And it is looking a little bit weak. Now, we did cross through some of that shorter term resistance, but we still have more resistance on the way up, 1978 to 83, 2001 to 2002, and 2035 to 43, and that is about where we failed last time, was at that resistance. It is not always an exact hit in the Fibonacci room. However, it usually gets pretty close. Then on the 15-minute chart, things are looking much better here. We have the 8 has crossed back over the 34. And then, of course, this is the most recent 5-minute pullback I have set you up here. And it also is a pattern of higher highs and higher lows, so it is looking more bullish. All right, everyone, I hope that that was helpful. If you do have questions, please know that you are always welcome to pop into the Fibonacci room and ask questions. We are in there all day, every day, ready to answer any of your questions. All right, everyone, I hope you have a wonderful rest of your day, and we'll talk to you soon. Thanks. Bye-bye.